What's good, y'all, and welcome to Slang Capitals. And today I'm gonna be doing a video on supply and demand. So before we get into the charts and all those good things, I'll be doing a couple of key terms breakdown for y'all, so y'all can try and understand what I'm gonna be talking about. And we're gonna get into the charts. And if you don't currently follow me on Instagram, please go follow me on Instagram at Slang Capitals. I do a lot of content videos over there. I drop a lot of educational videos, a lot of daily analysis of what I'm looking at. And if you don't currently subscribe to my channel on my YouTube channel, please subscribe to my YouTube channel where you can get daily notifications of when I drop videos. And let's get into the video and let's get it started. Let's get it. What's up, y'all, and welcome back to Slang Capitals. And on these slides, I'm going to break it down supply and demand. And while breaking supply and demand, I'll be breaking down a couple key terms for y'all that I would want you guys to understand. A couple of important key terms that it will be really important and crucial while trading supply and demand. And one of the key points that I would want you guys to understand is break or structure, which is a boss. And the second one is chalk, which stands for change of character. And the third one is supply zone. And the third one, that's a demand zone. So what is a break of structure? A break of structure is simply a continuation to the current trend in the market. For a break of structure to be valid, it has to take the previous swing high or swing low in the market. Simply, what a break of structure is just a continuation in price movement. This is an uptrend. This is an uptrend, and this is a swing high right here. This is a swing high. This is a swing high right here. This is a swing high, and this is a swing high. What you can actually see and remark is that this right here is a swing low. This right here is a swing low, and this right here is a swing low. The market is not taking out any swing low. The market keeps taking out the swing high. So the market took out the swing high with this swing low right here. The swing low right here took out the swing high, and then the swing high right here created this swing high right here. Then the market dropped down, went down, and then the market went ahead and did what? Created a new swing high right here. But while creating the swing high right here, the market ended up doing what? Taking out the swing high right here. So while creating a new swing high, the swing new low took out the swing high and then created a new swing high right here. Then the market did what? Retraced back down and then took out the swing high right here and then creating this new swing high right here. So all that the market is doing right here is respecting the swing lows, respecting all the swing lows and taking out all the swing highs. And simply what the market is doing is just simply telling the trader that this bullish trend is continuing. This is actually just a full continuation in price sentiment. So a break of structure is simply a continuation in price action, in price movement. So we're gonna go into the next example. Let me show you. This right here is a downtrend. So it's simply the same concept, but this is just price is just in a bearish sentiment. So this is a swing high right here. This is a swing high. This is swing high. This is a swing high. And this right here is a swing low. So what the market is doing, the market is respecting all the swing highs and actually just taking out all the swing lows. So this swing low got taken out by this swing high. So this swing high right here took out the swing low, and then created the swing low right here. Created the swing low. So it took out the swing low, this swing high right here, took out the swing low, and then created a new swing low. And then the market did what? Retraced back. The market retraced back up and then came back down again and then took out this swing low right here, this swing high right here, took out the swing low and then created a new swing low right here. And then as you can see, the market just continues doing the same thing. So simply what the market is simply doing is just simply doing a continuation. This just tells the trader that the market is still in a downtrend. The market is still in a bearish sentiment. So that's all that it is to break of structure. All that it is that break of structure is a continuation to market sentiment. And now we're gonna go into the next example, and this is what is chalk or change of character. A chalk is simply a reversal in market movement. Chalk shows us that the trend is about to reverse from its current trend to the opposite trend. Simple explanation is boss is a continuation while chalk is a reversal in price action. So what this is simply saying is a break of structure is simply a continuation while chalk is a reversal in price action. I know that's kind of confusing, so I'll try and break it down into the next slide so you guys can understand what I mean by this. So this is what I mean. When you look at the left, price is in a bearish sentiment. Price is respecting all the swing highs. Price respect the swing high right here, takes out the swing low, creates a new swing low right here. Market retraces back up, takes out the swing low, I mean, which was created by this swing high. The market takes out the swing low with this swing high right here, creates a new swing low, goes back up, the swing high, takes out the swing low, and then creates a new swing low. So right here the market is just in a continuation into the downside. But what you see right here, price does the opposite. Instead of price respecting the swing high, what price ended up doing, price ended up taking out the swing high by the swing low. The swing low right here ended up taking out the swing high. Once price took out the swing high, this simply signals to traders that price is about to do what? Go into a bullish sentiment. So this chart right here is simply a reversal. It's simply a reversal into the opposite direction. So on the left side, the direction was bearish, but once this chalk accurate happened, price ended up reversing and then started going into what? A bullish sentiment. So a chalk is a reversal while a break of structure is a continuation in price. So that's the difference between chalk and breaks of structure. So this is demand zones versus supply zones. Supply and demand zones are simply areas in the market where a trade is bound to take place, a sell or a buy. Supply means sell and demand means buy. This is quick. This the easiest explanation I could come up regarding supply and demand. So when you see supply, just think of selling, and when you think of demand, when you see demand, just think of buying. So demand means buy, supply means sell. Note that for a supply or demand zone to be valid, a break of structure or chalk, which is a change of character, has to happen. I know this is kind of confusing. I'll try and break it down again into the next slides, but I want you guys to really pay attention to this. For a supply or demand zone to be valid, a chalk or a break of structure has to happen, and that is really important while trading supply and demand. You guys will see in the next slide. Okay, so in this slide, when you look at the left, price is in uptrend sentiment. So price is respecting all the swing lows and taking out all the swing highs. So this swing high got taken out, this swing high got taken out, and all the swing lows are being respected. So what happened right here? What you can see right here, this is a swing low. This right here is a swing low. What happened is price, instead of respecting the swing low, price ended up taking out the swing low. Once price took out the swing low, this indicates to trader that price is about to do what? Price is about to change its sentiment. This is a reversal. This is a reversal movement. This is a reversal movement. But once price created this chalk right here, this supply zone right here was valid. So for this supply zone to be valid, this chalk had to happen. A chalk or a break of structure has to happen for a supply zone or a demand zone to be valid. But this is a supply zone example, so I'm gonna just be showing you supply zones examples in this slide right here. So right here, this is a supply zone. For this supply zone to be valid, this chalk had to happen. So once price change character right here, broke this swing low, price retraced back to this supply zone, which was validated by this change of character. But what do you see here? Once price mitigated this supply zone, price dropped. Once price dropped, price ended up taking out the swing low. So this candle right here took out this swing low right here, creating a bust, a break of structure, creating a break of structure. Once this break of structure was happened, price did what? Retraced and mitigated the supply zone. So this supply zone right here was validated by this break of structure. Without this break of structure, this supply zone wouldn't be a valid zone to be traded. So what happened next? Price ended up doing what? Went back down, and price ended up taking out the swing low. So this right here is a swing low. Price ended up taking out the swing low with this candle right here. See this candle right here? I know you guys can't really see it really good, but this candle right here ended up taking out the swing low right here. Once price took out the swing low right here, price retraced back to this supply zone. This supply zone was validated by this break of structure right here. Once this zone, this swing low got taken out, price ended up retracing back to the upside, mitigating this supply zone, and then price did what? Price dropped. So this is explanation for chalk. This is a supply explanation. So in the next slide, I'll be doing a demand zone explanation. So when you look at the left, price is in a downtrend sentiment. Price keeps on respecting all the swing highs and keeps taking out all the swing lows. So this right here was a swing low, price took it out. This right here was a swing low, price took it out, and on the bottom right here there's a swing low, price took it out. But what do you see right here? What you see right here is this swing high right here, which price was respecting all on the left. Price ended up doing what? Ended up taking it out with this candle. This candle right here took out this swing high. Once this swing high got taken out, this is a sign of a reversal. This is a sign that price is about to change. There's a high probability that price is about to do what? It's about to change from bearish to bullish. So once price took out the swing high right here, this demand zone on the bottom became valid. This demand zone on the bottom became valid. Once this swing high got taken out, price validated this demand zone. So once price mitigated this demand zone, price went back up and then created this new swing high, which got taken out by this break of structure. Once this break of structure was taken out, it validated this demand zone. This demand zone got validated by this break of structure right here, and then market came down, mitigated this demand zone, and then went back up, created this new swing high, got taken out by this candle, validating this demand zone, got mitigated, and price skyrocketed back up. So this all that I want you guys to understand. Demand means to buy. So on this slide, once you can see these are demand zones. Once you see demand zone, you buy. And on the previous slide, supply zones, you sell on supply zones. And a chart is simply a sign that price is about to do what? Is about to reverse. It's just a high probability that price is gonna reverse into the opposite sentiment. So that's all that it is for supply and demand. I hope you guys understood. And if you guys have any question, you can always DM me on my Instagram at Slang Capitals. You can always DM me there. I can always give you extra explanation if you need an explanation. And that's all that I have. That's all I have for supply and demand. And I'm gonna get into the charts and try and show you guys some chart work explanation for how all this works in a real chart. So see ya. Thank you. What's up, y'all, and welcome back to Slang Capitals. In these charts, I'm gonna be showing you a couple examples of the things that I was teaching you guys in the slides. So I'm gonna be showing you how to actually use break of structure, change of character to get more profitable trades using supply and demand. So in this charts right here, I want you guys to look at one thing. I want you guys to look at one thing that I showed you guys from those slides. Once you see price actually taking out all the swing highs, right? Once you see price taking out the swing highs, you see price taking out all the swing highs, right? This swing high got taken out. This swing high right here got taken out. This swing high got taken out. And this swing high right here got taken out. One thing I want you guys to realize is that all the swing lows are not being touched. This swing low is not touched. This swing low right here was not touched. And this swing low right here wasn't touched. So let me try and write it down for y'all. This is swing low. That's swing low. I can swing low. No, I'll just clone it. Just clone it and break it down here because I don't want to write it down. It's too much. I'll just clone this one too. I'll just clone that and take this one out. I'll clone that and take that out. Okay, so these are swing lows, right? And I want you guys to realize that this right here are swing highs. These are swing highs. These are swing highs, but I'm gonna label them as break of structure because that's all that it is. This is break of structure. Price is breaking structure. Price broke structure here, and then price broke structure here too. Price broke structure here. Price broke structure, broke structure. So one thing I want you guys to realize is that every single time price is breaking structure, right? Price is actually retracing back down and then mitigate some type of demand zone, then price goes back up. Price goes back up. So for example, right here, price broke structure here, right? Took a structure, the market retraced right here. I want you guys to look at it clearly. Price did what? Retraced back down here and then came down and then mitigated this right here. This right here was the demand zone. I want you guys to look at it clear. See this right here? This indecision candle. This indecision candle played as a demand zone. And then right here, y'all see that? Y'all see how the thing I was showing you guys in the slides, how they actually work now? So price did what? Took out the swing high, right? took that swing high, price retraced back down, mitigates this demand zone, then price does what? Skyrocket, goes up. Once price goes up, right, takes out the swing high. The price took out the swing high right here. Once price takes out the swing high, what did market do? Market retraced back down and then goes ahead and mitigates. I want to show y'all right here. See right here, this demand zone right here. I know y'all can't really see it clearly, but if you go down to the 2 minutes or the to the 2 hours, I mean, or the 1 hour, it's going to show it clearly right here. This demand zone, there's a demand zone right there. So once y'all already realize this, once y'all see this and understand this, this is an uptrend. So all we're looking for is demand areas. We're looking for buy setups. That's all we're looking for. When you see price breaking out and taking out swing highs, all you're gonna be looking for is demand areas. That's all you look for. So I want you guys to see right here. So what we're gonna be looking for right now, we're gonna be looking for where is our swing high. Once we know where to place our swing high, we're gonna be waiting for price to do what? Take out that swing high. Once price takes out that swing high, right, all we're gonna be waiting for, a demand zone where we can actually take a position at. That's all we're gonna be waiting for. That's all you need when trading supply and demand, especially when you're looking for demand zones. This how you do it. This is how you do it. So I want you guys to see this. This right here, that's our swing. That's our swing high. Our swing high is right here. So all we're waiting for is price to take out. So price already wicked it out. Price already wicked out this swing high. Price already wicked at the swing high. So right now all we're gonna be looking for is price to do what? Price to retrace. So I'm gonna try and slow it down for y'all because it's a 10x. I'm gonna try and put it 3x so price can actually the market can actually move slowly. I'm using the replay button. So the next thing that we're gonna be looking for is our demand zone. That's the second thing we're gonna be looking for. We're gonna place our demand zone. So most of the time I'll place my demand zone right here. This way my demand zone is gonna be at, because there's an institution candle which is imbalance. So it is always good for an imbalance for your demand zone or supply zone to be left behind by a constitutional candle, which is right here, which is an imbalance. I don't think I'm gonna be breaking that out today. Explain to you what imbalance is. I just want you guys to know that a big candle, an institutional candle like this long, that's imbalance. So let's see if the market is gonna retrace back to the zone. Let's see. Okay, the market came down. Market didn't touch the zone. Okay, so the market didn't what? The market didn't touch the zone, but the market gave us another demand zone right here. The market gave us another demand zone right here, and then market also broke structure because market did retrace back. Well, didn't touch this demand zone, but market took out this swing high right there. So I'll be expecting for the market to either come back down here or right here, and then I'm gonna be taking a buy. So let's see what the market does. Let's see what the market does. That's what the market does. Did the market come back down? Okay, it's coming back down. It's coming back down. It's retracing. Let's see if it does. Let me try and expand this for y'all so I can be able to see it clearly. So let's see what the market does. Oh, it's taking too long. It's taking too long. Okay, it's retracing. It's retracing. it's coming back down. So when it comes to trades like this, I wanna let y'all know, since we have two zones right here, right? With both of these two zones right here, when you're trading live, I would always recommend people to take confirmation entries. Always take confirmation entries when it comes to setups like this with two zones to enter. Always take trades using confirmation. So this trade right here, I wouldn't just directly enter this trade, because I already seen it has two zones, two entry zones, two demand zones. So I'm gonna wait for a confirmation entry. But in this example, I won't be getting into all that explaining confirmation entries. I'm just trying to show you how structure and change of character actually works, and how you can actually combine them with supply and demand. So that's the whole point for this video. Let me play the price back. Okay, price did what? Mitigate that zone. Price mitigated that zone, and then price did what? Price goes back up. Yep, price goes back up. So what you can see is that price ended up mitigating the zone right here. Yep, price ended up mitigating that zone right there. He just came up an inch, didn't actually really touch it, but he came close to it. And then price did what? Went back up and took out the swing high, this major swing high right here. Price did what? Take it off, and that was a break of structure. So that's all that I wanted to explain to you when it comes to break of structure and change of character. So this was a demand example. I'm gonna try and go find more examples that I can share for supply examples. So let me let me check gold. If I can see something. Let me delete this. Nah. Let me see. I want to show you examples of what I'm talking about, so I can see. So that cycle always continues. You see that cycle over and over in the market. You see that cycle that just shows you over there, over and over. Price breaks structure, retraces back down, mitigates something, and then price goes back up. And does the same thing. Even with the with supply, the price always goes the same way. I don't see anything that I can show you. This is gonna be our next example that we're gonna be looking at. In this, the cable GBP USD. I want you guys to look at something. What you see right here is the market doing what? The market is in an uptrend. The market is in a bullish sentiment. So all this swing highs are being taken out, and all the swing lows are being respected. All the swing lows are being respected, and all the swing highs are being taken out. I want you guys to see something right here. This was a swing low. So once I seen this swing low being taken out, right here, that was actually a change of character. So when this swing low got taken out, I will label this as my change of character. So when this swing low got taken out, I start looking for what? I start looking for where can I get my supply? Where can I draw my supply zone of where I can actually take advantage and opportunity to actually get in for sales. So most traders will look at this supply zone right here, and because price didn't actually mitigate it, most traders wouldn't actually take a trade. But most traders wouldn't say this breaker block. So right here there's actually a breaker block. So I actually look at this breaker block, and the other thing that actually validates this breaker block is this imbalance candle right here. This imbalance candle right here actually validates this breakup block to be traded. So if there was no breakup, if there was no imbalance right here, this breakup block wouldn't be a valuable place to actually enter for a sell in this chart right here. So this breakup block would act as supply, So once you see this, once you see this and actually price mitigate this, what you start waiting for is price to do what? Take out the next swing low, which got taken out right here. This swing low got taken out right here. Got taken out, so that's a break of structure. So now, since the price took out this swing low right here, what we're gonna be waiting for is for price to actually go up, retrace back up, and come and mitigate this zone right here. This supply zone. But since there's a supply zone right here, most people don't realize that this too, like the way I'll mark all this right here as a supply zone. This right here is the whole full supply zone. So I'll wait for price to actually come mitigate this supply zone right here, and then for price to do what? Go back down. So we're gonna wait, and our next swing low is right here. So this is our next swing low right here. So our swing low is gonna be right here, right there. So that's our swing low right there. So I'm gonna place a break of structure down there. So I'm gonna play price. Okay, price didn't actually mitigate or didn't even get close to this supply zone. Price didn't get to this supply zone right here. So what I'll start looking for, sales. I'll start looking for more sales and looking for another supply zone on this area right here. So our next supply zone is gonna be right here. Our next supply zone is gonna be right here, because this is a clear indecisive candle. It's an indecision candle. So it will act as a supply zone or a POI, point of interest. So I'll place my my break of structure line up there, and I'll do it like that. So, and then I wouldn't do that because price is actually not fully finished moving. So we're gonna wait for price to actually mitigate the zone, and then price to do what? To drop. And the other thing that I like telling traders and most of my students is, always take your trades using a confirmation entry. Always use a confirmation entry when you taking your trades. So let me try and put it like this so y'all can see. Always use a confirmation entry when taking your trades. I'm gonna play the play button. Price got close to my zone, and then price keeps going. Let's wait. If price is gonna mitigate it, let's wait. One of the confirmation that I see that price is actually gonna mitigate this zone is this liquidity out here. Price left a lot of liquidity, so this is more confirmation that price is actually gonna do what? This is it's liquidity. It's a sell. Where is that? What was I'm looking for? Buy side liquidity. Yeah, that's buy side liquidity. Yeah, and we're waiting for price to do what? Take out that. Yep. So price did what? Price just did what I was expecting for it to do. Just liquidity right here. Price came up, took out the liquidity, mitigate the zone, mitigate our supply zone, and then price does what? Go back down. So let me see if I can get one more example for y'all, and see if I can try and explain it, because this is already price was already mitigate this zone right here, supply zone. And let me see, my next swing low is gonna be right here. This my swing low right here. So I'll wait for price to actually take out that swing low for me to be able to look for any setups. So if price doesn't take on this swing low, it can mitigate anything that you want to mitigate, and I wouldn't take that trade. Price actually has to take out this swing low, then every trade, every zone that's going to be in here is going to be valid. That's how I trade supply and demand. That's how I trade supply and demand. So let me see. Okay, right here, price does what? Price does take out this swing low. Price takes out this swing low, and now we start waiting for what? For any zone, any supply zone in this area that we can actually take advantage of and get a trading opportunity. For this one right here, I don't see any supply zone in here, but I know that if I'm to go back to the lower time frame, I would actually get a supply zone in here that I could actually take trades from. But I wouldn't do that just because of this video. I'm actually just doing examples. This for just educational purposes. So let me see my place to trade. I'm gonna play the play button, and price goes up. And yep, let me see. So price did, yeah, so there was something which price actually mitigated up there. So our next swing low is actually gonna be in here, right here. This is our next swing low. So when price comes down, takes out this swing low right here, next one we're gonna start looking for more supply zones for us to actually sell from. So okay, price actually did come. Price comes down, takes out this swing low, and yeah, see that, right? Came down fast, take out the swing low. I'm gonna place my breakout structure up down there, and I'm gonna fix this so y'all can be able to see it. Where would I place my supply zone? Or would I place my supply zone? Okay. So there's a clear supply zone right here, but also there's I want you guys to notice that there's a breaker block. So let me take this out so I can see. Let me take this out with okay. I didn't even see this when I was placing that. So there's a breaker block right here. There's a breaker block right here. See that little breaker block? Yep. Because this breaker block is actually valid because of this imbalance candle right here. This imbalance candle right here actually validates this breaker block. But I would label all this right here, all that right here. Yep, it's a supply zone. So even this supply zone is also included in it. But that breaker block right there, that's the real deal right there. Most times a lot of traders don't actually take trades because they'll be expecting for price to actually come to this supply area, and price won't even reach there because there's a breaker block. So let me see. Yep, price mitigate the breaker block, and price dropped, and price drops. So this is all that it is to our supply zones. So that's all that it is to supply zones. I hope this was quite simple. I know this video is quite long, but I hope you guys understood what I was trying to explain. When you see supply, you think of selling. When you see demand, all you think about is buying. And I hope you guys got value from this video. And if you have any questions, any sort of question, you can always DM me on my Instagram, on my IG at Slang Capitals, or you can DM me and I'll always respond to you. I'll always explain anything that you want to know. I'll always explain to y'all. So if you have any questions, DM me on Slaying Capitals. And if you're not subscribed to this channel, please subscribe to this channel to get notifications whenever I drop videos. Whenever I drop content, educational video, you can always watch them. Just subscribe to this channel and follow me on my Instagram too. I'll always drop educational videos on my Instagram and content, my daily analysis, what I'm looking at, anything. So you can always follow me on Instagram, and you can always ask me any question on Instagram. I'll respond to y'all and I'll help you out. So that's all I got, and I'm out. Kudos.